All right, we're going to start powering through now. So 4.6 is all about establishing bank accounts. So far we've looked at legal requirements, so registration, taxation, government regulations, and then trade practice legislation. And then you've also done some work on external professionals when establishing a business. So now we need to look at establishing bank accounts. Now, it is very likely you already have, and if you're opening a business, your own personal bank accounts. But it's actually really essential for a number of reasons to open up your own business bank account. Much of this is so that everything is performed through a separate bank account. And things like the separate entity accounting principle states that we should always record the transactions of the business and its owners separately. It's much easier to do that if you have those bank accounts separated. It also means that things like your financial performance and position are going to be much easier to calculate as it keeps it separate from your own personal dealings. And calculating things like business expenses, like bank fees, revenue, interest earned, is way, way easier when it comes to preparing tax returns. The last thing you want to be doing is trawling through your financial records and trying to separate out what was business and what was personal. Okay, so that's one of the reasons why it can be or is really important to have a separate business account to your own personal account. So, opening a business bank account can be as straightforward as walking in and saying, I need to open a bank account, and having the correct proof of identification, and then agreeing to the terms offered by the bank, which is the same as opening a personal bank account. But you need to make sure you're choosing the right bank account from the right institution, because there's going to be different factors that will come into play. So things like your bank fees, it might not seem like a big thing at the time, but depending on how you're operating your business, bank fees can come into play really quickly. So it's really important that you are checking what you're going to be charged. So while it's legally required to be stated in your product disclosure statement, so your PDS, it's up to you as the customer or the business owner to actually ensure that you understand what the fees are. The other thing is your interest rates. It's probably a more important factor in determining your choice of bank account. Because it's like when you think about it, you're either earning that interest for the money that you have sitting in the savings, that's your reward for having money sitting there, or it is the money that you are being charged for the privilege of borrowing money. In this instance, though, if you're opening a bank account, you're going to have money sitting there, and the interest rate will determine how much money the business will earn on the amount of money they have sitting in the bank account or the loan. But you have to take into consideration what kind of account you're opening up. An overdraft facility. So some financial institutions will allow business to withdraw more money than they actually have available. So going into a level of debt. It's known as a bank overdraft facility and can be an important feature for a business that might temporarily fall low on cash flow. So you might have a business where you are going to have large outgoings of money all at one period of time. And you might need to use that overdraft facility, knowing that you are, or hoping, because you never know, that you are going to get that revenue back for that investment. And you should be planning accordingly. Credit cards. So having a business credit card can also be convenient. But again, different credit cards are going to have different features. So the maximum amount that you can spend, the interest rate on an unpaid balance, the different terms that you can have associated with that credit card, and then convenience and support. So whilst you might choose a bank that on paper has the best interest rate, it has no fees associated and things like that, they might not actually have a branch in your town or anywhere that is convenient for your business operation. So it's just something to keep in mind. They might not have any physical banks. ING, for example, don't actually have physical locations that you can go into for support. It's all over the phone or internet. So it depends on what features you also need. Access to things like apps also come into play for that convenience and support. Okay. So again, one of these little guys is going to be really important. So those factors to consider when choosing the right bank account. You need to think about all of the different elements and memorize these and what kinds of things are part of that. All right, and into the questions. Just when you're answering your questions, make sure that you're thinking about that broad brush stroke and then going into detail where you're required, especially with a case study. With your case studies, if you are presented with a case study, make sure you're reading what's actually presented to you and using those pieces of information to support your answers as well. All right, we need to get these done and we're going to do 4.7 as well.